Welcome. In this video, we'll explore penalties and the most common mistakes businesses make, and how you can avoid them. Corporate tax is still new in the UAE, and many businesses are adjusting to the system. But the Federal Tax Authority has made it clear, non-compliance will cost you, not just in fines but also in reputation. Here are the major penalties: a late registration fine of 10,000 United Arab Emirates dirhams. Late filing penalties, which include fixed amounts and a percentage of the unpaid tax. And for late payments, the FTA applies interest daily or monthly until the amount is settled. One of the most common mistakes is late registration. Even if your business is small or not yet profitable, you're required to register within the timeline. Missing the deadline will trigger that 10,000 United Arab Emirates dirhams penalty. Another frequent mistake is in calculating taxable income. Some companies incorrectly deduct expenses that aren't allowed, such as personal costs or penalties. Others misclassify related party transactions, which can distort the taxable base. Accuracy is critical here. For multinational businesses, ignoring transfer pricing rules is a big risk. The UAE requires that transactions with related parties follow the arm's length principle. If not, the FTA can adjust your taxable income and impose penalties. Proper documentation is a must. So how do you stay safe? Register and file on time. Keep detailed, accurate financial records. Prepare and update transfer pricing documentation. And when in doubt, consult a tax professional. Remember, prevention is always cheaper than penalties. Stay compliant, protect your business, and you'll avoid unnecessary risks. Don't forget to subscribe for more UAE corporate tax insights.